An uneasy feeling that swept over big tech. The Nasdaq down 25% year to date, and layoffs appear to be on the way for many of the big winners over the past few years. Uber CEO Dara Khosrowshahi saying in an internal letter that the ride-hailing giant will be hardcore about costs and treat hiring as a, quote, privilege. Uber shares down 45% year to date. Netflix, Amazon, Meta, all down more than 30%. And the question looming over the entire sector is really who will be the first to make some drastic cuts? Rochelle, it feels imminent at this point.
It really does. I mean, we did see it when Meta had its hiring freeze. A lot of us were wondering who's next. I mean, Business Insider came out with this chart showing that based on some of the double down on hiring that some of these companies did, these may be some of the ones who are most likely and most primed to end up having some layoffs. I mean, we saw, if you compare that hiring spree in terms of the ones that could be next, they were looking at perhaps Shopify, DocuSign, Netflix, Zoom, Block. I mean, if you take a look at Amazon, for example, and the sort of employment change you saw versus the stock change, at least they're down a little bit, down 37% there. But look at that hiring chart. That could mean that some Amazon staff could be expecting perhaps some layoffs to come, given the huge amount of hiring that Amazon did. So a lot of companies, still not out of the woods yet. Look at Shopify there. They had 100% in terms of their hiring change. But look at the difference in their stock price, down 76%. Obviously, at some point, they're going to have to try and stop the bleeding and make some kind of cuts in order to stay profitable. And you have to think it's likely going to come from the workforce. Shauna?
Yeah, it certainly will, Rochelle. At least it seems to be if they do, in fact, follow what we heard from Facebook last week, just in terms of their plans to hold off on hiring, at least for the short term. But I think if we take a step back and we think about the tech sector more broadly, we have to remember that these names were the ones that investors had favored for so long. So we were expecting, I think, to see a pullback within this sector. I don't think the severity of the pullback might have caught some of these investors by surprise. But the big question now going forward is when we are going to see some buying opportunity, whether or not now is the time to buy some of these beaten down names. We just heard from Kevin Mann in the last segment in the first block there that, in fact, there are some tech names that do look attractive right now, just relative to how they were priced at the start of the year. So certainly I think we will hear about some layoffs in the sector, probably some more hiring freezes. And I think that isn't a huge surprise when you take a look at a performance of a name like Facebook off more than 40% since the start of the year.
And Rochelle pointed out Amazon, how much they grew. You hear them talking about a year's worth of growth in a quarter, but they are clearly maxed out. They are not having a need for any more warehouse space, any more employees. But we talked about that chart a moment ago showing companies' stock price versus their hiring. And the one that stands out to me is a real winner of the pandemic and loser out of the pandemic, which is Zoom. I mean, wow, have they been hammered. They have hired up 168%. Their stock is down 60%. And you're hearing over and over again as companies are now rebounding into business travel, returning to the skies, returning to full office. Zoom, one of those that stands out that could be imminent.
Yeah, certainly. Again, the tech sector, more broadly speaking, Nasdaq 100 off over 25% since the start of the year. Tech stocks are racing $1.5 trillion, more than $1.5 trillion in market value from the Nasdaq 100 in the past 3 days. So
$1.5 trillion, 3 days.
Yeah,